Life insurance policies in a divorce action. The division of life insurance policies is a topic that does not get enough attention in divorce matters in Wisconsin. My name is Kyle Kaufman. I practice family law in Wisconsin at HKK Law Offices. I want to tell you some things about life insurance policies, things you need to know. One thing is, you can only take out an insurance policy on another person if you have what's called an insurable interest in that individual. And this means you would experience a financial loss or hardship if that person were to pass away. In most cases, this applies to close family members, business partners, or others with a clear financial connection, such as someone who supports you financially or shares joint debts or obligations. If there is no financial relationship or dependency, such as with a friend or an acquaintance, then the insurance company generally will not allow the policy. The insured person's knowledge and consent are always required before a policy can be issued. I'm aware of situations where one spouse is the owner of a life insurance policy and the insured person is the spouse's family member. For example, the spouse's parent or sibling. Now, the spouse who owns the policy is the beneficiary then of that policy. And what does this mean for the other spouse, the spouse who does not own the policy? An ex-spouse or soon-to-be ex-spouse in a divorce does not automatically have a claim to a life insurance policy on a parent of the other spouse. It depends on who is the policyholder, who's the beneficiary, and what the divorce decree states. So the person who owns a policy can typically change the beneficiary, but a divorce decree could override it by requiring the owner of the policy to maintain the ex-spouse as a beneficiary for reasons like child support. The ex-spouse would only have a claim to the policy's cash value if the policy is a whole permanent one, like a whole life policy, and if a divorce settlement designates it as a marital asset to be divided. Here are some important points you need to know. Number one is that ownership does matter. So if your spouse owns a policy on their parent, the policy itself is part of your spouse's property, and you do not automatically have a claim to it just because you are married. Two, you need to know the beneficiary designation matters. The beneficiary, that's the person who receives the death benefit, is separate from ownership. Even if the beneficiary is currently your spouse, a divorce does not automatically change that designation unless the state law says so or a court orders that to be the case. Third thing you need to know is that marital property law matters. I'm in Wisconsin, marital property state. So property acquired during the marriage can be considered marital property. However, a policy owned by one spouse on a parent's life is often considered separate property because it was purchased for a parent, not jointly for the marriage. So the marital estate can only include the policy if premiums were paid with marital funds, in which case the marital portion might be subject to division. The fourth thing you need to know is that marital funds matter. As I mentioned, even if marital funds were used to pay the premiums, the division typically applies to what we call equitable reimbursement, and it's not a claim necessarily to the death benefit itself. Simply being married does not automatically give you a claim to a life insurance policy your spouse owns on their parent. Any potential claim would depend on whether the premiums were paid with marital funds and whether state divorce law treats such property as marital. So, if marital funds were used to pay the premiums on a life insurance policy that's owned by one spouse, the other spouse may have a claim to reimbursement for the portion of the policy that was paid with those marital funds. And what you want to do is determine the marital contribution. That means tracking the premiums paid during the marriage using marital funds. And only the amount paid from marital property, the marital funds, the joint accounts, community income, that is potentially recoverable. Premiums that are paid from separate properties, such as inheritance, gifts, or the policy owner's separate funds, may not be recoverable. So calculate your potential reimbursement. That's an important thing. Courts will look at the marital share of premiums and may award that amount to the other spouse. So if there was $12,000 in premiums that were paid with marital funds over the marriage, then the non-owner spouse could potentially claim reimbursement to the marital estate for that $12,000. And that comes back into the mix. So how are you going to recover marital funds that were used to fund the life insurance policies? This is tricky because not everyone gets it. So you have to negotiate this in the divorce settlement. The parties can agree that the policy owner reimburses a marital share in cash or offsets it against other marital assets. If there's no agreement after negotiations, then you have to obtain a court order. And the court can issue an order for reimbursement as part of the property division. Now the death benefit itself, that's usually not divided. and it's really only the value of the marital contributions that courts look at. The courts will generally not award a portion of the death benefit itself because the policy is owned by one spouse on someone else's life. In your situation, documentation is really important. You want to have proof of the premium payments on that life insurance policy. That could also require you to obtain bank statements, canceled checks, and reach out to the insurance company to get proof of those premium payments. If you pay life insurance premiums with marital funds during the marriage, you're going to have most likely a claim to reimbursement in the division of your marital assets. Take the time to consider the points that I've made in this talk. Meet with an attorney to gain knowledge on your rights. We help people transform their lives at every stage. Thank you.